Good morning, everyone. Happy Tuesday. It's about 8 a.m. here. Prices of BTC currently at 92.63. Okay, so I want to show you guys a couple of trades that we entered and exited yesterday. All right, so first things first, we had a long trade right here. Right, we got in somewhere around what was it, 91.60 or something. Let me see. Oh no, I'm sorry. My entry was 92.75. Okay. So this was basically where we were right here. Okay, so I think we were entering right around this area right here. And then this shot up and I closed out my longs up here, and I think the rest of my community did as well. All right. And so you're probably wondering, well, how do we know to close out the longs here and then later go short? And I'll show you guys my short trade as well. Okay. So first things first, to understand exactly when to close out your longs, go short, or add on to your longs, move your stops, etc., you need to understand some basics about technicals and some basics about just how price action gravitates towards where liquidity is. All right. So I've been saying this for days where there's a lot of stops residing in this area, right? I stated that, all this right here was basically a line in the sand, drawn by the bears saying that you shall not pass right here. Okay. So for the most part, we knew that there was a lot of shorts sitting right here. So if you didn't take profit down here or down here, all right, you were susceptible to something like this happening because your stops would be just above this high or any of these highs right here. And most likely, even if you were in this blue box, you still got stopped out, right? Because this wick poked up pretty high, okay? So, even people who shorted down here, right, or late shorters right here, they definitely got squeezed out all the way up here. Okay, so it's not that I knew that this has to happen. It's that it was probably the most, likely path for price to take to find liquidity. This is easy liquidity for price to exploit. All right. And I knew that because this is just human psychology. All right. People get so greedy when they short right here and they don't take profit right here, or they short down here, okay, and price then runs up and squeezes them out because they're not following technicals. They're trading based on their emotions, okay? And emotional plays like that will definitely get you killed, all right, in the market. So here's another reason why I stated that, over here, right? This was a bad area to short. Why? Because this was the monthly open of November. Okay. So the monthly open of November started right about there. Okay. So when it started right there, notice how price gravitated to the monthly open multiple times right there, multiple times right there. And now that it went up all the way up here, stopped out everyone, now it's wanting to come back to that same monthly open, just like it did for this October monthly open way back here. Look at the blue line. October started right there, okay, right around this area. Check that out. Support on the monthly open, okay, pushes up past the monthly open, comes back down. Uses the monthly open as resistance, resistance, support, support, and then resistance right here, resistance right here. The monthly opens are a critical importance for understanding that price likes to gravitate back towards that area. Why? Because it contains the most amount of action and volume. And the way you can see this is kind of like this. Okay, so let's do fixed range right there. All right, so I'm going to do this. So watch this, okay? Look where a lot of the volume price action is. It's right around this cluster right here, right? And even, down here, you can see a pretty high volume node right around that monthly open. So you can see a lot of the action not only takes place right in this area that I told you guys about, that 94, 9500 area, but also down here, which is near that monthly open. This fixed range volume profile helps you understand where exactly, a lot of the volume and a lot of the price action happens. And you can see the volume is clustered around this area down here and up here in this high volume node. Okay, so a good way to look at that with the fixed range. Okay, next thing we want to look at now is, again, our trades, right? I stated that I got into a entry right here around 92.75 or so. I had my stop set around, I think 92.45 or something. And this pushed up, closed out my position. And then what I was waiting for was on some higher time frames, like the 15, or I'm sorry, the 1 hour and the 4 hour, as well as the daily, right? This happened. What I was waiting for was something like this to have price come back under this range, okay? And I'll tell you where this range comes from. The range is this white, top band right there, and the bottom range right there. You can see this is where a lot of the price action comes into and gets rejected, or it spends a lot more time in here, right? Like it did over here. So I stated that, okay, once price comes back into this range on a higher time frame, like a 4 hour, then I will short. Okay, so I got into shorts right here, and then when price pulled back around, I got into more shorts up here. So this gave me an average entry about 94.40, I think 94.30 or so. So then I went short. Okay, so here's that short right there. You can even see, all right, so my entry was 94.10. Again, there's that screenshot right there, right? Price was at 94.20. Look, that's where I was hoping that price would pull back down into. And once that 4 hour and daily closed, all right, so I could show you guys that right now. So this was the I think this was the 4 hour that I was looking for, right? A close back inside. And then the daily as well, which looked pretty brutal because it did not cross this 95.55 resistance. I said, you know what, I'm going to short this thing. And I shorted this basically at the top of this wick that you can see right there. Okay. So I shorted that right there. And now I'm in pretty decent profit on my short, right? Price is down almost $200 from my entry. Okay. So this is how you trade. Okay, you don't try to catch the tops or bottoms or FOMO into trades. You gotta wait and see exactly what price is trying to show you. See, I could have easily gotten into a long right here, but did I know what price was going to do right here? Absolutely not. I had an idea that price is going to run up here, but I wasn't that confident. But once price broke out of this range and it said, okay, I'm gonna go up, pull back down, test it as support, use this, test this area right here as support, and then push up and pull back. I said, all right, this is go time right here. I entered some longs right in this area, placed my stop just beneath them. Or actually, I think I entered it right here, and my stop was right below here. And then I just rode this thing up because I knew for the most part, once I got the validation, or I'm sorry, the confirmation that this is ready to move up, I'll enter a long and I will ride it from this point all the way to this point. I don't need to ride it from, catching the bottom down here and all the way to the top. There's, again, you're never really going to know exactly what price is going to do. But once you get a bit of confirmation from, smaller and higher time frames, then you could take a chance. Then you can set your stops appropriately, and then, see if that the logic of your technicals is going to execute. And mine did, right? So you got a short squeeze, close out your longs, and then enter your shorts right here, sitting in good profit, right? And so now you're probably thinking, okay, so where exactly is this thing wanting to go? Okay, so let's move this thing around, all right? So we've entered um, our shorts right here. So I think I'm right around that area. All right, so I'm going to change this up, okay? Average short entry, all right? And I'm going to move my stop. Now you can move your stop potentially in profit just above this high right here, or you can honestly, keep it at break even if you want, okay? If you want to get stopped out in profit, this would be the best area, about 93.50, okay? So now what are we looking to target? We'll probably target this range right here for sure, okay? Because this was the previous, sort of accumulation right here before the push up. So more than likely price is definitely going to come down in this area. And this area, remember, is around 91.60. So remember what's around 91.60, right? That's the November monthly open right there, right? So more than likely price is going to try to come down and hammer this area right here. And then what are we thinking? All right, well, after that, we have a bigger trading range, right? So the bigger trading range then brings the next target to the bottom of this trading range right here. So around let's just say 9,000. Okay, so that's your, let me see. So actually the first target profit is probably where the monthly open is, so right around there. Second target profit is probably around this area. Okay, so this is around 9,000. This is where this entire base right here kept hitting, right? So touch right there, touch right there, touch, touch, so around 9,000. And then target profit number 3 is way down here. All right, so we'll make it right around this area where this consolidation happened before this upthrust. So that makes our profit marker around 8650. I would say probably 8750 just to be safe, somewhere around this area, or 8700. Okay, so now we have 3 different markers to look forward to, right, for our short position. And everybody this morning is talking about this, gap that was filled by the CME, and they're saying, oh, it looks like, the gap was already filled. It didn't reflect in price. Man, I swear everyone, in the crypto space is very impatient. You gotta wait and see what price is going to do through the day. This literally happened just a couple hours ago. We have an entire 12 hours left in this, daily candle. I mean, this is not done yet. Okay, who knows? How do you know that it can't go down here just like the CME gap, got filled right here? Okay, and here's an interesting thing, right? Um, Price is being set up perfectly for a drop anyway. So I don't even care about the CME gap. I'm so tired of this obsession with the CME gap from people who don't even understand it. Gaps are filled because the market is escaping and taking off when the actual CME futures market is closed. This is why gaps are created, and they get filled because those that were trapped and missed out on this, and they were in the opposing side of the position, want to get that price back to fill that gap in so they can cover their losses that they would potentially incur. Okay, so this is why gaps get filled. There's no necessity that gaps have to get filled. Like, I'll show you. If you think that this is the gap that has to get filled, right, then that means that we need to fill up, there's a gap. Let's see, there's a gap right there too, right? There's a $11,600 right there, 11,800 or whatever. There's a gap right there, so that needs to be filled. But let me show you something else. Okay, here's another gap from way down here. All right, here's another gap that needs to be filled too, way back here in February. We never filled this gap. This is around $3,500. So what about this gap? So you can see that, when you make the arguments of gaps, you have to understand them in context of what you're talking about. Why do they have to get filled? Is the price anywhere near, the gap right now to get it filled? And are we even in somewhere close to the same month? Because remember that these future contracts, they go forward maybe 1 month or 2 months, maybe 3. If you're talking about a gap that was left behind, 6 months ago, I mean, it's ridiculous to assume that at some point has to get filled. It may, right? It may get filled, but it has nothing to do with because, the traders from February are still trapped and they need to escape when price ran up this much, and then they're going to try to force the price down to fill that gap. That's not how it works. Okay, so when you're reading these comments on Twitter or whatever, wherever you're getting your information about gaps needing to be filled, or because this gap got filled, now does that mean we're done? Does that mean now we're going to start taking off? Not necessarily. I mean, this could really just be a precursor to what may come into the spot market. Because remember, we're technicals traders, okay, folks? When you look at the price, I mean, you keep hitting this trend line right here. What is going to happen to this trend line when it keeps hitting it over and over again? It's going to break, right? You can see the touch right there. Another touch right there. Touch, touch, multiple touches. Again, and now we're coming back to that same trend line again. So what do you think is going to happen to this trend line right here if we come back to it? It's going to crack. It's going to break. And we're probably going to go back to this consolidation period that I told you guys about around $8,600, $8,700. All right. So those are, my thoughts. Honestly, I've just decided to not listen to anyone on Twitter. And not that I ever did pay attention to them, But now I pay attention to them even less so because it's just pure garbage out there. You know, um, always be very careful about whose information you let into your mind. You know, because they're the information can be pervasive and it can really cloud your judgment from making the potential good decisions that you may already have in your mind. All right. So, again, stand guard at the gates of your mind and the gates of, misinformation that may come in because there's really, a whole lot of bad misinformation out there from people who don't understand how markets move, how markets function. And so I urge you to vet them, and I urge you to, sort of vet even myself, right? If I'm wrong, I mean, there's, more often than not, I try to admit that I'm wrong. If I ever miss it, call me out, okay? Anyway, long spiel, but I just had to get that off my chest. So anyway, the daily chart still, again, no daily clean close, meaning a whole, open and close above this 95.55 area. All we did was wick into it, get rejected. And we're not even, coming up close to closing near this area. All we're doing is poking up and saying, that the water's too cold up here. You know what? Let's go back down. All right. So price is really just taking, to me, the path of least resistance, which is potentially this double top, and it might head back down. All right. So yeah, I think that's pretty much it. Another thing that I found interesting was the Bitcoin rich list. This article is really fantastic because it talks about how the addresses of Bitcoin wallet addresses of 1,000 Bitcoins or more are getting heavier and heavier in terms of they're getting more massive, right? So this tells me that there are bigger players entering the market and they are willing to drive and push around this market just to be able to exploit and get your Bitcoin off your hands. And the way they do that is by spreading misinformation, or for those that are not technical traders, right, those that are FOMOing into positions or those that are reacting to price emotionally, those are the people most susceptible, and they hand over their Bitcoin to these addresses right here. Okay, so be very careful and don't think that this space has become easy to make money in. I would actually argue the point that it's going to become increasingly harder from henceforth. Okay, so again, if you're not part of the Cryptosomniac community, folks, come join all these lock channels like that you see. The gains that you see from my end, every single trade that I take, I put out, and I show you guys my losers too, right? Yesterday I closed this with 32% profit, but I also had losers the other day too. 3.9% loss, 22% profit. I mean, I have many losses, okay, as you can see right there. But what I always do is I try to minimize my losses and maximize my winners, like that one and that one and this one right here that we just had, right? So my style, what I'm about, folks. I do this thing every single day. I love to trade. I love to sort of hang out with my community. This is my job. I don't do anything else. I love to trade. I love the crypto markets. This is how I make my bread and butter. So do you really want to follow someone who has nothing at stake and who doesn't take trades that he's putting out? Or do you want to see someone take the trades, with you, or show you that he's taking the trades, and you can follow along if you want, right? You decide. All right, I'm always here, cryptosomniac.com. All right, hit the products page, or there's a link below in the YouTube description. You can join the Discord channel for free, or you can join the paid side with all these locked channels, and then you get these channels right here where we put out trades for our Advantage members. All right, take care, cheers, and I'll talk to you all soon.